Hi guys and welcome to the trading show. This week we are gonna talk about
Markets, Bitcoin rebound. Our portfolio, good week for currencies. Tip of the week, should I buy the worst stocks? And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week.
A slightly negative week for the entire equity sector, although positive medium-term returns of Nasdaq and S&P 500 in recent days, they have suffered a slight decline. Bond indices, on the other hand, continue to rise. Returns are all positive both in the short and medium term. Nothing particularly relevant to the energy and metals sector. Meats and softs had negative returns except for cocoa and live cattle. Grains sector and currencies are pretty stable, and the most relevant fact of this week is the fast movement of Bitcoin that has marked a plus 20% since last week. I want you to focus on this gap that represents the Bitcoin movement over the weekend. The chart we are looking at is the chart of the future quoted at the CME, and therefore it does not entail any trading during the weekend because the market, the CME, is closed. So this is not what actually happens for its underlying. So although it is a regulated instrument, these tools remains extremely risky if you want to bring position over the weekend. Looking at the volatility term structure, we are still in full contango with low volatility levels, even though we have had a slightly negative returns of the SPX index this week. This phase can be observed also comparing the quotations of the futures on the VIX. We see that in this type of situation, the short-term volatility is lower than long-term volatility.
After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome back to this new appointment with the analysis of our portfolio. This week I want to show you two strategies on currencies market, and I'm really happy to show currencies strategies because this market was pretty unstable during the previous years, but over the last months this particular sector has started to recover very well, as for example this first strategy, we can see it here on the Euro future. That is a trend following strategy based on the highs and lows of 3 to 5 days ago. And it is a multi-day strategy, so it stays in the market also after the end of the session. And we can see that on Friday took a beautiful trade last Friday, not this Friday of course. We can see it here with a short entry. And now it is in a long position with two contracts, as we use this strategy with two contracts in profit of $2,700. The equity curve is fine, is good. Of course, this market is not so volatile, and so gains can be very high in this situation, but the good point is that these markets are scalable, and there are also CFDs that allow to scale our positions until very small lots. Let's have a look also at the list of trades to see the profits gained in the last week. We can see it here, $2,800 and around $700. And so we are really happy that also on this future gains has returned. Now let's move to the next strategy that in this particular case it is different if compared to the previous strategy that was a trend following, and in this case the strategy is a bias one developed on the British pound future, and it will enter long on Mondays, close the longs on Thursday, and on the opposite, the short will enter on Thursday and it will close the position on Mondays. This kind of strategy has performed quite well, I must say, during the last months. Now it is in a short position, we can say pretty flat. And looking at the equity curve, as said, the strategy has performed really well. And so we are really happy that this particular sector, the currencies sector, has returned to give us some satisfactions. And so I advise you guys to also try to develop your own strategies on these markets to find out some good edges.
Hi everyone and welcome from Andrea Unger. Today we will continue discussing about American stocks markets, and we will continue to see if it's worth buying the worst stocks. We will do the last episode about this topic today. So today we will continue with the analysis we were doing the last time, and we will see the last two baskets I want to see. And in particular, we will continue then on the SP 500 basket and the Russell 2000 basket. As usual, guys, I remember you, I'm doing the test with proprietary software we have developed internally in Unger Academy, and this software is able to consider also the survivorship bias effect. So those kind of backtests will not be affected by the survivorship bias. So you will see into the backtest the results, also considering the stocks that had made a default or had been delisted, or they just have been removed from the indices composition due to the composition change in general. Okay, so let's start from the S&P 500, and in this case we are doing again everything with weekly rebalance. So the rebalance is made during the weekend, so every end of week for the next Monday, and in this case we are considering 1 month as period to choose the worst stocks, and in this case both for the Russell 2000 and for the S&P we are considering 10 stocks because in my opinion 5 was just a very few number for what regards the Russell, or sorry, are 10 for the S&P 500 and 25 for what regards the Russell 2000. Okay, so let's start with the S&P. As we can see here, the equity shape is pretty nice. The CAGR, so the compounded annual growth rate of the portfolio, is interesting, and it's higher if compared to the benchmark, but at the same time also the drawdown is much more higher. We can see here, for example, the time to recovery of the portfolio, that is represented by the black histogram, is much more higher than the red one that represents the benchmark. And also here, during the baddest period of the pandemic crisis of the coronavirus, the drawdown here has been much more higher for what regards the portfolio if compared to the buy and hold. Okay, so let's go at this point to the Russell 2000, and in this case here we can see the returns are really interesting. In fact, it's 4 times the returns of the benchmark in this case. So the compounded annual growth rate here is nearby 34%. That is a lot, of course. But I don't like so much that is concentrated mostly on the last part, and I don't like also that the drawdown is extremely high for what regards this portfolio if compared to the benchmark. Of course, in this case, the returns are extremely interesting, but also the drawdown periods are quite long. In fact, here you would have had a time to recovery from 2014 approximately up to 2020, so about 6 years. And this period, of course, is extremely long, and just for this reason, most probably I wouldn't trade this kind of strategy, because it doesn't show me a good consistency in general. Now let's go with the second method, and in this case we are still doing the backtest with 1 week as a rebalance frequency, but we are analyzing the worst stocks on a smaller amount of time. And let's go to the S&P 500. I think this backtest is quite nice. Also the return in this case is interesting, but like the previous case for what regards the S&P 500, the drawdown is extremely high. Here we have approximately 83% of drawdown for what regards the strategy, and 57% for what regards the benchmark. So the drawdown of the strategy is significantly higher, and during the crisis periods, it seems that this strategy would have made significantly worse than the benchmark, and this is not a good fact at all. And now let's go to the Russell 2000. Here the returns are quite interesting, not like the previous case, but they are in any way interesting. But also here the time to recovery is not good at all. We can see here that when the benchmark had made some new peaks in the past, like here, the strategy drawdown was increasing, so this is not a good signal in general, in my opinion. And this means that in a lot of periods, this kind of approach would have made some disasters. And also during the pandemic period here, the strategy would have made a disaster, even if it would have recovered also in a good way. So the analysis for this kind of approach is pretty similar to the previous ones. We can see interesting returns, but also higher drawdowns. So I think those kind of approaches are interesting, but they have to be mitigated, or in general the drawdown should be reduced using also other strategies, or in general working more on this kind of strategies, maybe adding some conditions that may reduce a little bit the suffering periods and the bad periods.
Coming to rollovers, this week we have rolled all the contracts related to metals, currencies, in particular Bitcoin futures and Ether futures, and energy contract that are RBAB gasoline, natural gas and heating oil. Next week we are gonna roll all the meats, so live cattle, lean hogs and feeder cattle. We must do the rollover because the liquidity moved in the next contracts. In particular, the next contract for the feeder cattle is the one of September. For lean hogs and live cattle, the contract is the one of October.
I hope you enjoyed this video. And if you want to learn more about the trading method we at the Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the four-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.